Hi everybody, it's Yoni Zofan again. Today is Thursday, September 3rd. Labor Day's around the corner, and that means summer's over. So I thought we'd take a quick look back at what the market's done over the summer and since really COVID started in mid-March. Since March 18th, when the prompt month NYMEX contract was trading at 160, it is up nearly 55%, and as of yesterday was trading right around $2.50. Quite the increase. Looking ahead at winter 21-22, it's also trading around 250 right now, and it's up 33%. Obviously, we've seen some significant gains throughout the summer, and I'd like to call out exactly why. The predominant reason why is daily production numbers. And to understand the story behind the production, we really have to go back to March, to when COVID started, and talk about two different impacts that were occurring at the same time. On one hand, we have a supply impact. On the other hand, we have a demand impact. The demand impact is pretty obvious. COVID. COVID comes, businesses close, and we have a reduction in natural gas and usage, in electric usage, in total energy usage. That reduction in demand drives prices down. Now, I know I said prices went up, but we'll talk about that in a second. Right as COVID came, prices continued to drop. At the same time, very ironically, we had a crude price war going on, and crude prices dropped to historically low levels. What that meant was that crude producers couldn't afford to keep drilling at the prices they were at. And so they stopped, they were slowly starting to stop drilling for crude. Associated gas that comes out of crude production is natural gas. So as they stopped drilling for natural gas, for crude, they in turn stopped drilling for natural gas. So at the same time that price is going down because of demand and price is going down because of crude on the supply side, we see less production coming in. We've got two of these factors that are both bringing price down, and ultimately though, they're the reason why price went up. Because that production came off by so much, because so much production fell off, now we have a fear of a shortage of natural gas. We're not actually going to have a shortage, but we're not nearly as plentiful as we once thought. Look at the graph for daily production over the past year and a half. You can see that we were in a very healthy level of 90 to 95 BCF per day of drilling production. And then you can see the impact of the COVID impact and the crude price war impact. It's down to 85 to 90 BCF. It's slowly ticking higher throughout the summer, but not in a meaningful way. And so that's why we see the near-term price increases up 55% since March for the prompt month, up 33% since March for the winter of 2021-22. So there's a lot of moving parts here. It's a little COVID related, it's a little crude related, and ultimately it's directly impacting prices for energy consumers. Hope this is helpful. Have a great day, and let's go green for good.